What if I told you that you are leaving thousands of dollars on the table every single year? You're making great money as a freelancer, a contractor, or a side hustle superstar, but let's be honest, when the tax bill hits, it feels like all your hard work vanishes. You're not alone. The biggest financial challenge for anyone working the 1099 life is feeling like you're paying twice as much tax as your W-2 counterparts. They withhold taxes, you have to guess them. They get benefits, you have to build them. But here's the secret. The U.S. tax code is actually designed to reward small business owners and self-employed individuals, if you know how to navigate it. I'm Lara, and on this channel, we turn your side hustle into a sustainable, profitable business by teaching you how to manage your money like your own personal CFO. In today's video, we are diving deep into 5 game-changing tax secrets that every freelancer and 1099 contractor must implement this year. These aren't complex schemes. These are simple, legal, and effective strategies that could instantly put hundreds, even thousands, back into your pocket. Stick around for secret hashtag 3, because that is the one mistake I see 90% of new freelancers making, and it costs them dearly. Let's start with the one thing that causes the most anxiety: quarterly estimated taxes. Most new freelancers treat this like a penalty, but you need to flip your mindset. It's a mandatory, scheduled savings plan. The IRS expects you to pay taxes as you earn, just like an employer withholds them. If you don't, you face penalties. The secret? The mistake is waiting until the deadline to calculate the amount. You should be using a simple formula. Set aside 25% to 30% of every payment you receive immediately. Put it in a separate, high-yield savings account, HYSA. Why 25-30%? This covers your federal income tax, your state tax, and the dreaded self-employment tax, which is both the employer and employee share of Social Security and Medicare, about 15.3%. The benefit: by separating the money immediately, you avoid the panic when April 15th rolls around, and you never have to pay late penalties. Treat the quarterly payment dates, April 15, June 15, September 15, and January 15, as automatic bill payments, not sudden financial shocks. Next, if you work from home, even just one corner of a room, you qualify for the home office deduction. This is a massive tax break, and yet many freelancers skip it because they think it's too complicated or raises a red flag. It doesn't, provided you follow the rules. The secret: understand the two methods and choose the one that works best for you. The simplified option is the easy way out. You can deduct $5 per square foot of your dedicated office space up to 300 square feet. Quick, easy, and minimal documentation needed. The actual expense method requires more detailed record keeping, but can lead to a much larger deduction. You calculate the percentage of your home used exclusively and regularly for your business. If your office is 10% of your home's square footage, you can deduct 10% of expenses like rent or mortgage interest, utilities, electricity, gas, internet, home insurance, and repairs and maintenance specific to the office space. Critical rule: the space must be used exclusively for your business. That means the corner of your living room where you watch TV cannot be counted. Keep a dedicated space. Okay, here is the secret I promised you, the single biggest financial mistake I see new freelancers make. They operate as a sole proprietorship. A sole proprietorship is the default. You just start working, and you are one. But financially and legally, this leaves you exposed. You are mixing your personal finances with your business finances, which complicates deductions and offers zero legal protection. The secret? As soon as you are serious about your freelance income, you must form an LLC, limited liability company. Why an LLC? The name says it all: limited liability. It creates a legal wall between your business assets and your personal assets. If you are ever sued for a professional reason, your house and savings are protected. The tax benefit: S-Corp election. Once you form an LLC, you can elect to be taxed as an S-corporation. This is a massive tax advantage for freelancers making over $60,000 annually. As an S-Corp, you pay yourself a reasonable salary, subject to payroll taxes, and take the rest of your profits as a distribution. The distribution portion is not subject to the 15.3% self-employment tax. This single move can save you thousands in Medicare and Social Security taxes every year. I am not a tax professional. Always consult a CPA or financial advisor before setting up an entity, but trust me, exploring the S-Corp election is essential. Moving on, when you work for a large company, they offer a 401k. As a freelancer, you have something better, the SEP IRA, Simplified Employee Pension Individual Retirement Arrangement. The secret: the SEP IRA allows you to contribute a huge chunk of your profits, up to 20% of your net earnings, or a certain max dollar amount, to your retirement fund, and every dollar you contribute is a tax deduction in the year you make it. How it works: you are literally lowering your taxable income by saving for your future. If you earned $100,000 and contributed $18,000 to your SEP IRA, the IRS only sees $82,000 of taxable income. The power of procrastination. Unlike traditional 401ks, you can often establish and contribute to your SEP IRA for the previous tax year, right up until the tax deadline, including extensions. This is powerful for last-minute tax planning. Finally, freelancers need to constantly learn and network. Fortunately, many expenses related to professional growth are deductible. The secret: you can write off almost anything that is ordinary and necessary to your trade or business. Education. Subscriptions to industry publications, online courses like Skillshare, Coursera, masterminds, and coaching related to improving your freelance skill are all deductible. Travel. If you travel to a client site, a conference, or a networking event, the cost of flights, hotels, and 50% of the cost of meals while traveling are deductible. Remember, the primary purpose must be business. Mileage. If you use your car for business, client meetings, supply runs, track your mileage. The IRS offers a standard mileage rate that you can deduct, which is often more lucrative than tracking actual gas and repair expenses. Use an app like Everlance or MileIQ to track this automatically. Look, the freelance journey is about freedom, but that freedom comes with responsibility. You are not just the creator, the salesperson, and the service provider. You are also the chief financial officer. By implementing these 5 secrets, setting aside quarterly taxes, maximizing your home office, exploring the S-Corp election, leveraging the SEP IRA, and tracking every expense, you stop paying unnecessary taxes and start building real financial resilience. Which of these 5 secrets are you going to implement first? Let me know in the comments below. If you found this video valuable and you want more strategies to turn your high-income skills into high net worth, there's one simple thing you can do for me. Hit that like button and subscribe to the channel right now. We drop actionable finance and business strategies every week to help you get paid what you're worth. Thanks for watching, and I'll see you in the next video.